I can tell you one thing. I'm decent at directional predictions. I'm terrible at timing them.
Yeah.
So it might be 5 years, but it might also be 10 years. I don't know. But I think Bitcoin will be more valuable than gold. And at today's gold price, it's $1.3 million a Bitcoin.
That it'll have a higher market cap than gold?
Oh yeah, over time for sure.
Okay.
I think. I mean, it's such a much better version of gold. Like
Yes.
I mean, when the first gold ETFs were launched, they
Yeah.
started mining more gold.
Yeah.
You can't do that with Bitcoin.
Right.
And so I think Bitcoin is so much better. Has actually, I think a lot of people, including recently Christine Lagarde, was saying like Bitcoin has no intrinsic value. I think it's a better version than gold. It's digital. You can move it around. It's way more fungible than gold that you wear as jewelry. And so I think it'll be worth more than gold.
In the race to rebuild the world's financial architecture, Bitcoin entrepreneur and innovator David Marcus envisions Bitcoin not as a rival to traditional money but as its missing infrastructure layer, the neutral, decentralized foundation for a truly open internet of value. His vision extends far beyond speculation. He believes Bitcoin's evolution from a mere store of value to a global settlement network marks the beginning of a new financial era, one in which trust is embedded in code rather than in centralized institutions. For Marcus, this transformation isn't only about Bitcoin itself but also about what can be built on top of it. Stablecoins, though inherently centralized, have become an indispensable part of the modern digital economy. His work at Lightspark focuses on reshaping how stablecoins operate by anchoring them to Bitcoin's immutable base layer. This approach aims to make digital payments faster, cheaper, and more trustless while maintaining security and decentralization. In this model, users can experience the benefits of stability and efficiency without compromising the core principles that make Bitcoin unique. Sustainability, however, remains essential. Marcus cautions that current stablecoin profitability, buoyed by high interest rates, will not last indefinitely. For stablecoins to thrive in the long run, issuers must adopt more durable business models, ones that share yield with consumers and integrate seamlessly with Bitcoin's settlement rails. Marcus envisions a future where Bitcoin's deflationary strength and stablecoins' practical utility merge, powering a transparent, borderless, and resilient global financial system that redefines how money moves in the digital age. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the broader financial landscape. Thanks for watching.
We believe that Bitcoin is the only neutral digital form of money that's decentralized enough to actually be an open internet for money. And we believe that the store of value phase is absolutely essential for us to be able to actually build a utility phase of Bitcoin on top of it. And the reason for that is if it's not valuable enough, then all of the institutions are not holding it. It's not accepted by everyone the way that it is today. And so it was a prerequisite step that took, the time it took. But now that every institution, like the large institutions, whether it's BlackRock, Fidelity, or others, are actually supporting Bitcoin, we have ETFs, we have nation states that are building positions in Bitcoin. It's legitimized enough that we can actually really start building a payment utility on top of it. And that's what we've been hard at work at Lightspark for the last 3 years. Well, I think, Bitcoin doesn't threaten the dollar or any stable, good fiat currency. Bad currency is a different story. But if you have a good, stable currency like the dollar, people don't want to use Bitcoin for everyday purchases because it's volatile and people want to actually benefit from appreciation of Bitcoin and they don't want to spend it. They don't want to be the Bitcoin pizza guy. And so, just that in nature is not a good medium of exchange. So the way we use Bitcoin is in the background, like TCP/IP packets for money. And so basically you can send dollars from a US bank account to someone in Mexico receiving Mexican peso in their Mexican bank account, or someone anywhere in the world for that matter, in their local currency. And basically the settlement asset is Bitcoin in between. So you go dollar, Bitcoin, Mexican peso, and it's invisible to people using it. And that's the way we use Bitcoin on top of Lightning and Spark now, and also enable stablecoin issuance on top of Bitcoin, and we can talk about that later, to facilitate global payments. I had like a schizophrenic journey with stablecoins on top of Bitcoin because stablecoins by nature are a centralized thing. Like there has to be a company that manages the reserves, And basically, when it mints a new unit of a stable coin, has to put $1 in the reserve. And it's a process that requires a centralized corporation to manage the thing, which I don't like, because I don't like a single throat to choke where governments and regulators that don't like it, or like established players like the banking industry in some parts of the world, can actually call a CEO and tell them to stop doing a thing, and they have to stop. There's no way you can call Satoshi Nakamoto and ask him, her, them to actually do something. So
Wish we could.
That's the beauty. I mean, I wish we could. Like, it's actually better that way. And so stable coins, now that they've become an inevitable reality of how you make money digital, and the horse has left the barn on this one, then my thinking and our thinking here has been, how do we make it actually a little more trustless than moving a stable coin on top of something that's also insufficiently decentralized, like an ETH-L2 or something like that. The way we've approached it is, we figured that if we built it on top of Bitcoin, without the use of a separate token needed to pay for gas for transactions, and you still benefited from unilateral exits to layer 1, then it would confer to the network, the settlement rails themselves, a more trustless nature. And so more open, more decentralized, more trustless settlement layer, on top of which stablecoins can actually move in real time at a super low cost, without the need of having a third-party token to pay for fees. You pay the fees in the stablecoin you're transmitting, which is like basically very similar to all the TradFi payment systems. I mean, that's just a capability for stablecoins. So we think that, if stablecoins are here to stay, which they are, then we need to give tools for stablecoin issuers to actually have a business model that actually resists the test of times. I think right now we're in a high interest rate environment. When the interest rates come down, you're going to see a lot of issuers not actually really making a lot of money. And so then it's like, how do you actually do this? And then at some point we'll figure out like how to pay yield back to consumers. And so if you're paying yield to consumers, interest rates are lower, and you're trying to incentivize payments use cases for stablecoins, like mainstream payments use cases for stablecoins, these are capabilities that you need. Of course, if you're moving Bitcoin, that's a different story. Bitcoin will always be cheap and real time on top of Spark. And that price can't change, right? It's 1 cent, and you can move sats in real time to a self-custody wallet at any given point in time. And that's the base settlement layer for everything else we do. So if you're sending dollar to someone, receiving, again, Mexican peso or euros on the other side, then the fees are going to be the fees to actually pull from, FedNow in the US and push to SEPA Instant in Europe, and the FX, which actually, using Bitcoin in between, can be very competitive. And those are going to be the fees that you're going to pay on top of the 1 cent.
David Marcus highlighted the profound transformation in institutional attitudes toward Bitcoin, noting that many traditional financial players who were once skeptical are now active participants. This growing acceptance marks a major cultural and economic shift, yet Marcus believes global adoption is still in its early stages, with only a few 100 million people holding Bitcoin. To him, Bitcoin's evolution into a global medium of exchange depends first on its role as a trusted store of value, a foundation that supports the security and credibility of the entire network. He outlined 2 paths forward: one where Bitcoin eventually becomes a unit of account for everyday transactions, and another already underway where it serves as a neutral settlement layer connecting fiat currencies and stablecoins. Looking ahead, Marcus envisions Bitcoin becoming a mainstream settlement network within the next decade, facilitating trillions of dollars in cross-border value transfers. He stressed that this future requires the coexistence of self-custody systems, which preserve individual sovereignty, and regulated banking structures, which enable lending and compliance. As the infrastructure matures, Marcus remains confident that Bitcoin's unique scarcity and technological superiority will ultimately allow it to surpass gold in total market value. At current gold prices, that would imply a Bitcoin worth around $1.3 million per coin, a milestone he views not as speculation but as the natural outcome of Bitcoin's progression toward becoming the foundation of a new, decentralized global financial system. Let's get back to the interview.
Yes, absolutely. This is actually a way for third parties. This is, again, not our focus, but it's a permissionless network. So our opinion doesn't count into what people build on top of it. It's open source, it's permissionless, it runs, people can build stuff. Like you had like those launch pads and playgrounds and all of those marketplaces, AMMs that are being built on top of Spark. We didn't decide that, it's just happening. And so the same can be true for all kinds of different assets that you would want to tokenize for the first time on Bitcoin. And again, you have like the distinct difference between this and another blockchain is that at any given point in time, you're going to have the ability to unilaterally exit to Bitcoin L1. So the trust that you have in Bitcoin L1 and the fact that no one corporation, person, group, consortium, foundation can actually mess with your funds is actually still valid for anything that you issue on Spark, which really is why it actually matters. On top of being cheap and fast. Yeah, it's kind of interesting. I was in New York yesterday, and I was speaking on a panel at that was put together by Citadel Securities about digital assets. And one of my co-panelists asked the room. It was like about 450 people that are like some of the world's largest institutional investors that are clients of Citadel. And like he asked them, like how many people own Bitcoin? And I was shocked, actually. The majority of the room owned Bitcoin, and those are very TradFi people. And then the same question was like, how many of you own ETH? Not that many. Like it was like, clearly at least half that, or if not a quarter of that. And then the next question was, how many of you have played with stablecoins? And it was like maybe a tenth of the room, if that. And then the next question was like, who bought like a meme coin or a token of any sort? And it was one guy. And so it's kind of flowing down. But almost everyone owned Bitcoin, which is kind of really interesting. It's and this is a room that, and the reason I'm mentioning that because this is a room that traditionally would have been very resistant to Bitcoin or be part of companies that would be very antagonistic to Bitcoin. And now the times have changed so profoundly. So I think, it's still early because, to your point, if you ask most people in the street if they own Bitcoin, probably the vast majority still don't.
Yeah.
And that's exciting because if we have, it's still in the hundreds of millions, low hundreds of millions of unique holders, I think, at this point. So the upside is just so massive. But I think we need to unpack that. It's like it needs to be a store value for the network to be secure, trusted, and all of that. So it's a prerequisite step for it to become what Satoshi wanted it to be, which is everyday payments. Now, on the way to everyday payments, there are two ways to think about this. One is actually using Bitcoin, the unit of account, for everyday payments. I think we're far from that for the reasons we discussed. But I think using Bitcoin as a neutral settlement network and asset to move between fiat currencies and to move stablecoins, this is happening now. And in the next 5 years, it's going to become mainstream in a massive way. And I think it's going to start moving trillions of dollars of value every year on top of the Bitcoin network. And I think when that happens, Bitcoin will have fully entered its utility phase. And in some cases, people will start receiving and sending payment denominated in Bitcoin. And then, time will do its thing. I think, the reality is you need both self-custody wallets that are fully trustless or as trustless as possible with a unilateral exit to Bitcoin L1 so that you don't have like someone or some entity that you depend on to get your funds out if there's an issue. And that's one part of the thing. Then banks are still going to be around, or something that functions like a bank that is capable of lending. And if you need to lend, you have to have deposits. And so, that will still need to exist. And I think banks will still need to be regulated. And so if banks are regulated, then for them to move money on the network, they need to meet their compliance obligations. And the question is, how far out can we move the cursor in terms of getting the banks, the banking industry, the banking regulators and the payments regulators to start being comfortable for banks to start sending money to self-custody wallets up to certain limits? Have we solved portable ID so that you can have a self-custody wallet, but you can have a KYC token of sorts, where for transactions above a certain limit, you can receive those payments from banks and regulated financial institutions? All of these are problems that we collectively need to solve for the network to work to its max capacity and max utility. And I think we will. By then, it's just going to be, the same way that you have cash and accounts, you'll have different accounts which will have different capabilities, and depending on where you are in the world, you'll always have an ability to have a store of balance with digital money in it, and Bitcoin will definitely be there, and either as an asset or as an underlying settlement network. And Bitcoin by then will have absolutely 100% won and become the internet of money, where all of the money in the world actually move. I can tell you one thing: I'm decent at directional predictions. I'm terrible at timing them.
Yeah.
So it might be 5 years, but it might also be 10 years. I don't know. But I think Bitcoin will be more valuable than gold. And at today's gold price, it's, $1.3 million a Bitcoin.
That it'll have a higher market cap than gold?
Oh, yeah. Over time, for sure. Okay. I think, it's such a much better version of gold. Like,
Yes.
when the first gold ETFs were launched, they started mining more gold.
Yeah.
You can't do that with Bitcoin.
Right.
And so I think Bitcoin is so much better. Actually, I think a lot of people, including recently Christine Lagarde, was saying, like, Bitcoin has no intrinsic value. But the general tale that people tell about the gold intrinsic values that you can wear as jewelry. I mean, come on, seriously? Under the underlying scarcity of Bitcoin secured by code is the intrinsic value. This is the only thing that's deflationary by nature. And so I think it's a better version than gold. It's digital. You can move it around. It's way more fungible than gold that you wear as jewelry. And so I think it'll be worth more than gold.
The ongoing evolution of Bitcoin and digital assets signals more than a technological breakthrough. It represents a fundamental restructuring of the global financial system around openness, neutrality, and trust rooted in code rather than institutions. What began as a decentralized alternative to money has evolved into a universal settlement network capable of connecting diverse forms of value, from stablecoins to fiat currencies. This convergence is transforming how money moves across borders faster, cheaper, and with fewer intermediaries. Stablecoins, meanwhile, serve as a practical bridge, offering transactional stability, while Bitcoin provides the immutable foundation that ensures long-term integrity and resilience. As institutional adoption deepens and global infrastructure expands, the groundwork is being laid for a financial ecosystem that is both inclusive and durable, one where individuals regain control over their money, innovation accelerates freely, and the world moves toward a truly open economy governed by transparent, decentralized principles. How might the growing integration of stablecoins and Bitcoin's settlement layer reshape the balance between traditional banking systems and decentralized finance in the next decade? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.